Joining us right now is Potomac Wealth Advisors President and Founder Mark Avallone. And Mark, it's great to have you this morning. We get a rally underway this morning of 176 points on the Dow Industrials. It looks like we've got a firmer tone, and yet in the backdrop, this report from the CBO calling for a 10-year recovery. Your reaction?
Well, there are two different stories. We have investors looking for the optimism that the Fed is giving them with these low rates and super liquidity, and Congress on board with stimulating the economy. But yet the realities of reopening are going to be slow just from the coronavirus itself. And now when we look at what's happening in the inner cities, the recovery is going to lengthen. The damage is not just physical now, it's to the psyche of people who are going to move out of cities, of businesses who are going to be reluctant to return, and that reduces the tax base for cities and states. I went to graduate school in Newark 20 years after the Martin Luther King riots, and Newark was still browned out, still had urban blight, and still lacked a vibrant urban core. And if a hint of that happens here, that will lengthen the recovery.
Mark, that requires supply chains coming back from China. Do you see that happening? And in the midst of all of this, how are you allocating capital? You say it's two different stories in terms of this slow but recovered economy and investing and making money.
Well, if you're going to invest based on an industrial resurgence, I think that's more of a 3, 5, or even a 7-year outlook. These supply chains are not going to move right away. I think a combination of this coronavirus and the inner city turmoil that we're seeing is it's just going to emphasize the work from home, the technology, communication, shop from home trend that we saw. And it's going to continue to weaken commercial real estate and also have a negative effect on retail. And that is what's been happening for investors. They're weighing into the growth engine, but there are obviously good reasons for that. What's happening now is going to just keep technology at the forefront. It's going to encourage investment in technology, new ways of conducting commerce, and that's where investors, I think, should be looking. I think there are still going to be values there because the change is going to be profound.